News today. This is not the biggest news in the whole world, but it's interesting, and I want to explain why I have the thoughts that I do about it. So let's start with talking about Nike, because I love talking about Nike. Did you guys know that AirPods, if they were broken out, would be bigger than Nike? Nike is a publicly traded company, like many publicly traded companies that you know about. And because they're publicly traded, they release information on how well they are doing as a company to the public every quarter, 4 times a year. I chopped it up to show you. So for example, in Q1, Nike might say, hey, we're doing pretty good, and the stock will go up. And then in Q2, they might say, actually, we're not doing so good. Things are getting worse. Our sales are going down, and the stock will go down. And then in Q3, they might say, actually, we're doing really bad in China, and their stock crashes. And then they might say, actually, we're doing okay. And it goes up again. That is a year in the life of Nike. And if you're a Nike investor, at least 4 times a year, you will get an update on like how many shoes they're selling, what their profit is like, what the future is going to be like, what countries are they doing well in. And this gives you an idea of whether or not you're comfortable holding the stock, buying more of the stock. You and everybody are caught up to what the management of the company knows, which is helpful because you don't want them to have too much information that you don't have. Trump today endorsed a dramatic shift to the US economy. He came out on True Social and said, hey, subject to SEC approval, companies and corporations should no longer be forced to, quote, report on a quarterly basis, but rather report on a 6-month basis. This will save money, allow managers to focus on properly running their companies. Did you ever hear the statement that China has a 50 to 100 year view on their management of the company, whereas we run our companies on a quarterly basis? Not good. So Donald J. Trump would like us to get rid of 2 of these reportings. So you only get 1 update in the middle of the year and 1 at the end of the year. You just get less knowledge of how the company that you're invested in or want to invest in is doing. Couple things with this statement. First off, he says that one of the reasons we should do it is that China has a much longer view on things, and we run on a quarter-by-quarter basis. So I looked up China's reporting schedule and what they're required to report. It's quarterly. It's the same, as is Brazil and Argentina and half of Europe and India and Canada and Mexico and most countries. Now, there are a few that do semi-annually, like he's saying, which is 6 months. That would be the UK, some parts of Europe, Australia, some parts of Africa. It's much smaller. So I looked up the UK. The UK switched to 6 months instead of quarterly in 2014. And when they did that, 90% of companies just kept reporting quarterly. So even though this one's blue, they still all report quarterly. And the reason they do that is because investors feel nervous when you don't get the updates, when they think more information could be hidden. The company could be getting worse for months and months and months and months, and you don't get an update. So you can be holding a stock that's bad. In fact, it makes insider trading much more powerful because the insiders have the knowledge for a lot longer before the public gets to know it. Second thing with this semi-annual change is that it's being paired with a new SEC appointee, Paul Atkins, who is openly saying, hey, I'm not going to be a tough guy. He said, we're not going to kick down doors over minor offenses. He's saying that we're going to basically not look at your books. We're not going to care if a couple little accounting things are wrong here or there. So the idea that we're going to have less regular reporting and an SEC that is not focused on enforcement means that the potential for fraud, misleading guidance, for bad numbers, for insider trading all goes way up. The combination of these things just means the average person that wants to invest has less to work with. They're more screwed over. So again, it's a toxic combo. I also wanted to see if there's any research done on companies that have abandoned the quarterly reporting. So I found some studies like this one by Tobias Bornman. And the consequences of abandoning the quarterly reporting are generally not positive. Generally, again, you get shakier numbers, you get investors that are more nervous, you get less investment in the company. So the idea that you can only be a long-term company if you can hide your numbers more doesn't make sense. And to give you a positive example, I want to say, these are all companies that executed 10 to 20 year long-term plans while still doing quarterly reporting. TSMC was not short-term focused when they spent billions and billions and billions of dollars to build foundries they wouldn't use for years to build a long-term potential for their business. Amazon did the same with like one-day shipping. Nvidia did it with CUDA and long-term investments that didn't pay off for years and years and years that paid off the country. Costco was one of the few retailers that said, we're going to pay our employees an above standard wage. We're going to lower our profit margin and raise our wages. And we're going to do it long-term to create a better business atmosphere people are going to love. They did that, and over 20 years, they have had incredible returns. Their stock is way up, but in the short term, it was really bad. So I don't think quarterly reporting is why a company has long-term or not. It's just management. Either you have good management or you don't. Kind of like a country. It's not the system that is deciding whether or not the company is thinking long-term. It is the management. I do want to say one thing. I'm fully able to have my mind changed. And while I was researching this, there was one twist that I learned that I want to bring up. One of these companies is Berkshire Hathaway. This is Warren Buffett companies. By the way, if you're watching this video within 1 year, RIP probably. I'm sorry. Probably. This is not like, I'm not involved, not responsible. But if you're watching this video in 2026, let's be real. RIP to the GOAT, bro. Warren Buffett had an interesting take on this. He said quarterly earnings reports are very good, but quarterly guidance is where the problem comes from. And I want to explain the difference. Every quarter, a business will report the numbers it has just happened. So like I might say, hey, Q1 was bad. And then they announce guidance, which is basically them just guessing how the business will do in the future. So every quarter, a company will be like, yeah, we did bad in the last 3 months, but the next 3 months, we're going to do great. So a company might say, yeah, our sales are down, but we're just about to have our new product come out. It's going to sell a bazillion. They'll generally be positive, right? And then when Q2 comes along and things are bad, they'll freak out. And the guidance is what causes more short-term thinking, because it turns out that chief financial officers consider failing to meet or beat a guided earnings target to be worse than not providing it at all. When they studied this, they found that the thing that gets companies in trouble is when they overpromise, and then they have to do short-term things to try and make that overpromise a reality. That's not what most companies do, I want to be clear. Most companies do the opposite, which is most companies lie and say, we're going to do not very good. And then when they do slightly better, they go, holy shit, we crushed estimates, to try and hype everybody up. But the main takeaway I realized from looking into all these studies is that corporate earnings guidance is wrong about 70% of the time. Generally, it's useless. It's like this weird song and dance that we all do, but they're never right. They always underpromise or overpromise. They never like just say the truth about what it's going to be like. There's a real case to be made that we could try to like collectively as a society get rid of guidance and make it so every 3 months you have to report how you did. That's it. Just give us the hard, cold data. It seems like the earnings reports are very good, but the guidance is where we get into trouble. But at the end of the day, I think this plan, this one, is stupid and won't help anything and will generally make the US market, which again is the most liquid, most deep market in the world. Everyone all over the world is investing in US stocks, will make it riskier, harder to tell what's going on, and worse for the average retail investor. Just a quick takeaway on this thought today. By the way, some companies have tried this, just to be clear. Coca-Cola, for example, stopped giving quarterly earnings guidance. There was no ill effects. Coca-Cola was fine. Coca-Cola has grown. They did it in 2002, and they have grown successfully for 23 years. I don't think guidance is necessary. I do think earnings reports are incredible and need to be well investigated and done as often as possible. Does anyone do bi-quarterly? I don't think so. You could though. I mean, because they know this, right? If you're a company, you know how much you're selling. If I'm NVIDIA, I know how many GPUs we're selling. I know what our profit margin is. I know it every day of every week. So you could report every day. This is how we're doing, this is how we're doing, this is how we're doing. But it'd take up so much of your time. That's why they do it quarterly. The more often they do it, the better it is for you as a regular person. Because then the information you have is close to what insiders have. The more far apart they do it, the more advantage they have. That's the basic simple idea of this, okay? Any ideas on why Trump wants this? I don't want to speculate, but I will, I guess. I'll just tell you that like making it easier to fudge numbers and having lax SEC guidelines is good for the stock market in the short term. It makes it less likely that a rising jobless rate and perhaps rising recessionary indicator would be picked up by the market. It allows you to kick the can a little longer, but it is bad for the health of the stock market long term. Whether he can even do it, I'm not sure. I mean, he's floated this idea before, but now he's pushing it, so we'll see. At the very least, they kick it 3 months down the road. Actually, I think it could be longer. So to be clear, like the way it's written, it's like, yeah, you get an extra 3 months of being able to hide bad numbers for businesses. But more realistically, what companies can do is like, how do I describe this? It's like, let's say you are a company and you have the Q1 bucket, the Q2 bucket, the Q3 bucket, whatever. You sell 10 bicycles here. You say you're going to sell 50 here. You're getting closer and closer to this. You haven't sold 50 yet. One thing companies can do is they kind of can borrow from the future with accounting tricks. So they'll steal orders that were already written for Q3 and put them into here to hit the number. So they actually sold like, 32, but they lie and say it was 50 to hit their goal. And they just borrowed that extra 18 from the future. So now Q3 is even harder to hit. That's the idea. But if you're only reporting twice a year, you can borrow from the future. And now you've pushed the realization of the problems another 6 months. So you can you can stretch things along a lot longer. You can get away with like shifty tactics a lot longer. That's what I think is I think this is all just to make it like a lot harder to know the truth about what is happening with corporate earnings, whether they're doing well or badly. We call it fraud. Well, some of this stuff is like technically legal. And especially when the SEC is like, if it's a small offense, we're not going to push it. Companies will be incentivized to be like borderline on everything. What you really want is like strong GAAP earnings enforcement. Everyone is on the same accounting principles. Everyone reports on the same schedule. Everyone has the same rules. So you can compare companies. This one makes money, this one doesn't. But we have so much fuzziness now. I'm still a bit confused what Trump has to gain from doing that. Again, this is speculation. I really don't know what is in Trump's mind and why he wants this. Maybe he really does believe that that's what China does and we should do it. China doesn't do this, but what I'm trying to say is if the economy is slowing down, that will start to show up in corporate earnings reports. But if they report less often and they can kick things down the road, then more likely everything will still seem green for a lot longer, perhaps even through midterms. It delays bad news. It is interesting that out of the blue, Trump is suddenly really interested in this very random, technically kind of minor change for corporate earnings reports. Like Trump is tweeting about the fate of the nation and Charlie Kirk, and then all of a sudden he's like, also, we need to really change our quarterly reporting to biannually. It's a weird thing for him to suddenly get really interested in. That's sort of what I'm trying to explain here. Probably, yeah, exactly. I honestly think this is real. I think Howard Lutnick or Peter Navarro told him it'd be a good idea and he just ran with it. That is a very realistic situation, but I hate both those people.